Alrighty. Well, welcome everyone. Really appreciate board members and community members that were able to take time out of their busy schedules to join us for the next hour or so as we dive into a really exciting topic, actually, that I know sometimes when we're talking numbers and budgets and tax returns and audits, I know that some folks, especially not the financially minded, sometimes, don't completely understand all the nuances and intricacies. And hopefully that today's session with Greg can really help clear a lot of those things up and still make it a nice, exciting presentation. For quick introductions, just wanted to mention thank you, first of all, for joining us for yet another installment of Westward360's education program. For those that are new to this, we have been doing these for about 12 months now. We started really a revamped education program back in July of 2024 and have really embraced trying to get that to be just something that you come to expect as customers, as board members, and as partners of Westward360. Us being able to utilize relationships that we have with a number of experts in the industry, make you more knowledgeable, better educated, and just becoming a better and better community member and board member. So do look out for future invites. We've been doing about one webinar per month, in addition to some other events and opportunities that we've been sharing with our board member customers. But today's installment, we will be, I think, deftly guided by the hands of Greg Schwab here from Sikorsky and Associates. And I'll let Greg introduce himself and give a little bit of an overview right before we get started into audits, compilations, reviews, and tax filings as you go into the 2026 calendar year.
Thank you, Eric. Can I screen share?
Absolutely.
Are we good?
We are.
Okay.
And then just quick thing, we will obviously take questions. If there is something that, is particularly confusing or anything in like as Greg and I are going through anything, do let us know. Otherwise, if it's a non-urgent question, something that you want to just take a note of, we will open it up to Q&A towards the end of the session in the last 15, 20 minutes. But obviously, if you've got something important where there's like a concept that's tripping you up, feel free to interrupt us quick. But otherwise, we'll get to Q&A at the end of the presentation.
Thanks, Eric. As stated, I'm Greg Schwab, a partner at Sikorsky and Associates. I've been doing this about 20 years. We specialize in HOAs, community associations as a broader term, condos, HOAs. We do audits, reviews, compilations, tax returns, AUPs, which is agreed upon procedures, are very specialized engagements that associations come to us for 1,400 associations, predominantly Chicagoland area, some in Indiana, some Wisconsin, but mostly Illinois. And a lot of us sit on our own boards. I sat on my previous board for 12 years, on the current one for 2 years. So we live it, we breathe it. This is what we do. This is what we know. We do nonprofits, 1040s individuals as well, but this is our bread and butter. And a lot of us have been here for a long time. Why HOA should obtain GAAP financial statements. GAAP is generally accepted accounting principles. It gives you consistency, credibility. A lot of lenders require it. You have a bank loan. They might request GAAP financials. We'll get into what is GAAP financials. There's multiple levels later. Buyers might want to see them when they're looking at your association. It gives you credibility. It gives you a third party saying your financial statements are free from material misstatements if you go the audit route. Support your long-term financial planning. The biggest thing I stress is transparency with ownership. I'm sure you board members hear a lot from owners. Where's our money going? They don't know what's going on. You have this 15, 20-page audit report from a third party that is giving opinion that your financials are reliable and free of misstatements. And it's usually less than 1% of your overall budget, the audit fee. So to me, it's worth it to give you peace of mind as a board and more transparency with those owners. What GAAP financial statements provide? Standardized financial reporting from year to year. It's accrual based, which I know can be confusing, but it's a way of moving your expenses in the proper period. It gives you a better financial picture when you're budgeting to see, because you might pay that gas bill a month after year end when that should have been hit your budget for the prior year. So some of these things adjust your books to give you a better financial picture. And what most boards want when they see this report is this last line: the surplus or deficit for the year. How do we do? Were we up or down? How much revenue did we bring in over expenses? Because we can get into more of that later. Because there's certain things in declarations. The state of Illinois even has a caveat of what you may need to do with that surplus or deficit. Speaking of the state, I guess we're over 8 years ago now, Eric. It's been a while, but beginning January 1st, 2018, we say most associations because there is a caveat with master associations and SECA and things like that. But most associations with 100 or more units must use generally accepted accounting principles, GAAP. So what does that mean for you? That means a year-end financials prepared with GAAP. And management companies really don't prepare financials in compliance with GAAP. That's not what they do. You need the disclosures, all those footnotes that you have. You need full accrual accounting. And this isn't Westward360. This is across the board. Management companies don't do that. So the state of Illinois requires this, that if you have 100 or more units, again, most associations, you need to have these GAAP financials prepared at year end. And again, it's these 3 levels of service: audit, review, compilation. We'll get into those 3 and the differences later. But who's asking for them? Again, lenders, buyers, title companies. They see you have 200 units. Where's your GAAP financials for last year? Have you satisfied the statute that the state of Illinois put in place 8 years ago? If you do have questions, we always say review it with your attorney, because again, there are some quirks when it comes to master associations. So the 3 levels of service to get you with the GAAP financials: audit is obviously the highest level, the most assurance. That's a very detailed approach where we look at invoices, we sample things, third party communication with banks, with some vendors, depending on how the audit goes. It's the highest level of assurance that the financial statements are free from material misstatements. Review is that second step down. It's limited assurance. With a review, it's pretty much just analytical reviewing, and then inquiries like why was this account $50,000 over budget. With an audit, we would analyze it further, but a review is just inquiry mostly in nature. And then the lowest level is a compilation, which is we provide no insurance. It's just putting those financial statements into GAAP form, so you have your balance sheet, income statement, cash flows, footnotes, and then your reserve study and expenses and things in the back. We're not required to gather any evidence. We don't, but it's the lowest. It's also the cheapest, but it gets you those GAAP financials to satisfy that 100 units. Which to pick? These are just some things to consider when you're deciding which level of service you want to go, what the board and management is looking for from the engagement. If you're simply looking to satisfy the 100 units, caveat, go with the compilation route. However, this third square, change in management or board of directors. If you change management companies mid-year or end of year, we would always recommend an audit. Why would you not want to make sure that your books are transferred correctly? You're talking 2 different softwares, right? This company uses this uses this. You want to make sure everything's brought forward correctly, nothing falls through the cracks, especially something like signature cards. You'd be shocked how many times an association changes management companies and no one updates the signature cards for the reserve accounts. And then if the board's asleep at the wheel, 3 years later, the money ends up with the state of Illinois unclaimed property. We've seen it happen many times.
Yeah,
Sizing.
Just to interject here too, Greg, like that particular item is something that we put into the onboarding process many moons ago, just because we ran into that issue with a lot of boards that wouldn't realize that suddenly you'd have, outgoing treasurers or treasurers from many years past who are still the signers, and then no one is able to access those funds, and it just becomes a huge mess. So we make sure that that's definitely something in that onboarding process, that we capture those signature cards and ensure the right folks are on there.
Well, especially with CDs, that's CDs inevitably, you don't get monthly statements. You may not get annual statements. You get it upon maturity. And if that's going to the old address, that can happen. investment, brokerage accounts, ongoing special assessments, bank loans. When you have things like that, why wouldn't you want an audit to ensure that, first of all, the loan may require it, but with special assessments, those are very complicated typically, especially for condominium associations. So the more things on here that you see are applicable to your association, you probably want to lean towards that audit, the highest level of assurance. And like the last one, board risk and fiduciary responsibility. The boards have a fiduciary responsibility to the association. So again, that audit fee, relative to your budget, why wouldn't you want that third party and that transparency with those owners that the board is doing what's best for the association? This is just a handy chart that we have. This is available on our website. All the way at the bottom, there's a little link for the matrix. And at the top, it says audit, review, compilation, tax return. And these boxes are what's included with each level of service. So like I said, go to our website. It's at the bottom. You can save this locally. A lot of managers have this printed out and on their desk, but it shows you what each level of service entails and what you're looking for. Here's that GAAP compliance. You see audit, review, compilation.
Greg, I just also interject here, boards and anyone, I highly recommend, same as Greg mentioned, I have a copy printed on my desk of this, as do most of our managers. I highly recommend keeping a copy of this handy, just because we often get this question, especially as we enter tax season. A lot of boards just don't really know the difference between an audit, a review, a compilation, beyond just the simple tax return. And there tends to be like a lot of just discord where, there are assumptions made that certain things are included in an audit. There's a lot of confusion just because there is a little bit of overlap on what some of them, as you can see, do include. So this is a really helpful cheat sheet to make sure, like if you're talking to your owners, if you have an upcoming board meeting, and if they ask that question as well, I've always found this to be a really helpful guide to have that 10,000-foot view as to what that scope includes at the most basic level.
Right, like testing of expenses, that's a lot of boards. Where did our money go? Why are we over these? Why are we over the budget in these accounts? That's only included with an audit. Understanding of internal controls, which is what's management. You're paying a third party, your management company, to handle your finances, your books, your day-to-day operations. Part of the audit is understanding their internal controls and reporting any issues we might find that strengthen your operations, your internal control procedures, things like that. That's part of this last slide, the management recommendation letter. A lot of boards find that more important than the audit itself because that includes our recommendations. And again, that's only with the audit. Again, recommended best practice for most. The assessment of internal controls, the CPA issued opinion. Ideal for larger associations, but again, if you're a smaller association with those special assessment bank loans, we have a lot of 30-unit associations that have done annual audits for years, just because it is good peace of mind. Significant cash and reserve balances, special assessment loans that change in managed companies again. And like I said before, looking to improve controls and what our recommendations, because you only get that with the audit. The review, the limited assurance, again, it's just analytical procedures, inquiry. We don't do anything with internal controls. Mid-sized associations, moderate to low activity, straightforward ones. You still want some sort of assurance from us, but you think the cost of an audit might be unnecessary, as well as how much time is involved in performing that. Lastly, the compilation. Again, those are just wanting to satisfy that GAAP statute. When we saw this come through in 2018, we had a lot that were just taxes only with us that went to this just to satisfy that. You still get the report looks similar to an audit. You'll get the balance sheet financials, footnotes, but again, all the bells and whistles that come with the audit, you don't get for the compilation. Tax, are we good for the different levels of service, Eric?
Yeah, I think so. And I think it's a good transition point to the tax return.
Okay, tax returns. Your association is required to file a federal and state tax return. I hope that's not news to anyone in this meeting.
I will say, like, just for a little bit of anecdotal knowledge, we onboarded a lot of communities in 2025. And if this might apply to anyone on the call, Calvin's actually a good example because he is at a smaller community that we manage as well. But we've had an alarming number of small association board members learn from us for the first time this year that they have to file returns. And obviously, you know, we were able to kind of tamp down the emergency like alertedness because we were able to help them through back filing and getting through that. But I will say, like, just for your information, Greg, it is surprising the number of communities that really might not know, especially if they're not of a certain size or level of complexity. A lot of small communities are learning for the first time that, oh, that's something that we were supposed to be doing all this time.
Yeah, this is completely separate from the 100 units we talked about. We have some 2-unit associations in the city. We have a 3,000 unit HOA, you know, 3 hours from here that we do. Both are required to file those federal and state taxes. Community associations, again, condos, HOAs, those are interchangeable. They're the only entities under the Internal Revenue Code that can file the 1120, the 1120H. There's a blog link in the back of this that some light reading later if you want the differences between those. I'm not going to get into it, but your audit risk on the 1120 is significantly higher than the 1120H. The tax rate is 9% different. You are paying more with the 1120H if you owe taxes, but the risk of the 1120 and the things you have to satisfy to even file it. So we put this in there, but we don't want associations to think, oh, let's pay the 21% to do the 1120, because the ultimate risk with the 1120 is your whole reserve fund could be taxable, which that would be a lot of money to most associations at 21%. Most of our associations, I would say 95% of them file the 1120H. Some that are commercial are required to file the 1120, but most meet that residential test and do the 1120H. Most of your income is not taxable, so you're not taxing your assessments, but we'll get into a couple more of the sources after this. But so don't think if you raise your assessments, you're risking having to pay taxes on that, because you're not taxing your assessments. Why do you have to file? Well, Uncle Sam and the state say you do, even if no taxes are due. And if you don't, they can assess penalties for failure to file. If you don't owe taxes, there typically are no penalties or interest. But if you do owe taxes and you don't pay in a timely manner, you don't file that extension, expect to see penalties and interest from our government. The 1120H, like I said, it's the choice for most of them. Your tax is 30% on the non-exempt income. We'll get to what that is. It's very simplified. Compliance avoids IRS risk. Again, the 1120 year audit risk is significantly higher for the H. I've never seen an 1120H audited. I'm sure they have, but I've never heard of it. But you still need to require proper accounting records too. So this is new. If we did this presentation 4 years ago, this slide wouldn't be here. But why does my HOA owe taxes? Predominantly because of interest rates in 23 and 24. That they're still high. You're getting CDs at 4%, 3.5%, 4%. In fact, we saw a 600% increase in our HOA clients owing taxes from 22 to 23. So we probably had 50 of our HOAs owed taxes for 22. We're at over 300 now. So your taxable sources of income, this is varies by association, obviously, but most of them have this interest income on your money markets, your CDs, things like that. If you have clubhouse rental, laundry, and tenant income, those are taxable sources of income, but you have related deductions against those, like your clubhouse rental. You have expenses for electricity, water, janitorial. You usually have enough deductions to offset that. Your laundry, your water, you can deduct portions of those expenses to offset that. You're kind of handcuffed with interest income because there's not a lot of related expenses against that, and there's caps for the ones that are. Like, for instance, the typical deductions for your interest income are management fees, only a portion of them, not all of them. Audit and tax preparation, so our fees 100% deductible. and some of your insurance premiums as well. Typically, it's just like the fidelity or crime premiums are deductible. If you have bank fees, advisory fees, if you have a complicated account, you can deduct those. But again, you're kind of capped at those. So if you're capped at 5,000 in deductions, and your income was 4,000 last year, and then you invested it well, now you're at 20,000, you're still at the 5,000 deduction. So that additional income is all taxable. And again, the last point, once interest rates fall, most of these associations, that additional 300 I talked about, are going to go right back to not owing taxes. So you don't want to hear it, but it's typically a good thing if you owe taxes as an association, because it means your reserve investments are doing well. You're still gaining far more interest than you're paying out in taxes. All right, so we've discussed the levels of service, what's best, the best way to approach it. So we're just going to go with an audit here. You decide to come to us, hey, can you give us a proposal for an audit? So then we'll send out a proposal and engagement letter depending what you want. There's two different things that we will touch on near the end of this. Secondly, it's best to contract us with as early as possible, because we typically do our engagements in order of engagement letter received. Some boards are willing to pay premium to be slotted before other ones, knowing that they want it in February or March, but typically that's the order we go in. So if you're coming to us now to do a 2025 audit, we probably can't start you until June or July. But if you came to us 6 months ago and signed, you could probably be slotted much earlier. So once you've signed the engagement letter, returned it to us, we request documents, we send out our preliminary questions. One thing I think that makes us stand out is that we send our questionnaire to the manager and the entire board. So it's a very transparent process, and typically the manager will handle the responses, but you get to see the responses. You get to jump in with any issues you may have to bring to our attention. So you see the audit unfold in real time. Again, this is the sending it to the manager and the board. Once we have everything we need, typically fieldwork takes 3 weeks. And then at the end of the fieldwork, we send a final list of questions, which is much smaller than that preliminary one we talked about, with any additional findings we had during the audit. Once we get responses to that, we finish the audit report with the related letters, and then we upload everything to the portal. Eric, any questions?
No, not on my end, really, at this point.
And this is for an audit standpoint. The review and compilation, review is probably a similar timeline. Compilation is much shorter timeline because there's so much less involved in the compilation. Back to the tax returns, the date, the filing deadline. This is from a December 31st year-end standpoint. If we have any fiscals in here, your year-end, your extension is, your tax filing deadline is 3.5 months after your year-end. Unless you're June, then it's 2.5. Lovely. The extension is due by April 15th, which gives you 6 months to prepare the return. However, those payments are due by April 15th. So just don't think just because you're extended, you don't need to make those payments. And new to 2024, which the federal government dropped on us middle of January last year, the 1120Hs need to be e-filed. So now the board president or treasurer, typically one of those, will sign the form of this, and then it's e-filed. So what we found with that, again, this is not Westward360, this is management companies in whole. The state and federal were letting us know that, yeah, we got your return, but we didn't get the last 3 years. So we send these returns out, but it's on management, the board of directors, to make sure they get to the respective parties. So that e-filing, because that gives us the ability to see if you don't sign the e-file form, we can't e-file it, right? So we're making sure that you guys do that so we can ensure that federal is filed. So that triggered a lot of these things that were just in the dark for years, that they weren't filing these returns. So I think there's a misconception that we would file the returns in the past, when that's not our job. Our job is to prepare the return. You guys sign them, review them, and mail them to the appropriate parties.
And just to chime in there, that is something that we've always been diligent about working with our managers on, so that they know that once they get those that documentation, when they get that prepared return, that we'll go ahead and capture those signatures where needed from the board, and then we'll send those in and then make sure that those are saved and archived. So if there are any associations where we have like a similar issue with, like to like Greg's scenario, where it's our first year managing you and we go to file your current return and then we suddenly find out that there were, back years where they weren't, we can definitely jump in there and help with that. But yeah, Greg's point is well taken, and one that we've accounted for in our processes for the communities that do work with third-party accountants.
Unless the state is, I hope the state changes this, but that still needs to be paper filed and mailed.
Yep, that's
We're
right.
hoping the state goes to e-file, and they get a copy of the federal return. So you're e-filing the federal return of the feds, and then you're printing a copy of it and sending it to the states. So clear as mud. I hinted at the client portal earlier. When your audit, review, compilation report, or even just tax returns are ready, we have a secure portal where we upload all the documents. The portal administrator is typically the board president, unless there's a different board. Some boards have the treasurer who kind of runs things, wants to oversee that. But typically the default is the board president, and they can perform the portal related functions such as adding new users. And then also on the portal will be the treasurer, manager company accounting if applicable, and the property manager. So again, that's that level of transparency where everybody has access to the documents. And from a management standpoint, if you're a manager with us that has 5 audits, they're all under the same portal. You don't have to go to multiple links. They're all there for you in one. And our new portal that we started a week ago, you'll be able to view any outstanding balances you may have with us too. So this is from the audit standpoint. What do you get from us if you do an audit? You get a cover letter, which a lot of times is just glossed over, but that is what shows if we're missing anything, because we try to stick to that timeline. If we're missing 1 or 2 minor things, we might just issue the audit report with this cover letter that says we're missing, this subsequent bank statement, this landscape contract, whatever. So that cover letter, don't just think it's a document you don't need to see. We put it in bold and in the middle if we're missing anything. So review that cover letter you get from us. Representation letter, that's included with the audit or review, not a compilation. That's something that the board and manager needs to sign. It's basically saying that you've given us everything. You represent that everything is true to the best of your knowledge. So you'll see that there as well. The management letter, like I said, that's, long story short, is where it's our recommendations. That's what boards find the most helpful. It includes many other things. It's typically 6 or 7 pages, but the recommendations are what most boards like. ATB AGE, that's fancy for adjusted trial balance and adjusting journal entries. That takes management's numbers, which are the unadjusted, and then any adjustments we make, and then the final audited column of numbers, your cash expenses, and then that foots to the audit report. So you have our audit report, like the expenses, for instance, don't always look like management, because you might have 5 different repairs and maintenance accounts for plumbing, roofing, whatever, and we lump it all into one called general repairs and maintenance. You don't know how we got to that 15,000. This report here, this adjusted trial balance, will show how we group these expenses that foot to the report. And that typically will show prior year's expenses as well, so it gives you more information for budgeting and planning purposes. The audit report itself shows our opinion. This is the financial statements, the footnote disclosures, the supplementary information, which is a fancy way of saying your reserve study, and then the tax returns, the federal and state tax returns.
Greg, kind of a 2-part question that I think is just kind of well-timed related to that last slide. But we had one in the chat and then just one that I kind of had as well. But as for the chat, at a fairly basic level, Danielle asks, can you give examples of what kinds of items are typically found in audits that need responses or resolution? So I guess, like, in your opinion or in your experience, like the usual suspect items in that, like the ATB AGE report and that audit report of like a normal findings that you guys tend to find in your experience.
Again, this isn't a Westward This is
Sure.
management companies in general. They manage multiple associations with similar names. You might have Pine Table 1, Pine Table 2, Pine Table 3, 3 associations. Your vendors aren't the best at labeling that correctly. You could have an association that pays for another association's invoice. That's something we find from time to time. You might overpay on a contract. You might underpay on a contract. These are things. That's why we look at the contracts. That's why we compare it to budget. We dive into those expenses more. Trying to think of other common findings like that. Over underpayments are probably the biggest one that we see, and then that management letter will detail your insurance premiums were $60,000. However, we noticed 9 payments totaling $65,000.
Mm-hmm.
Recommend you contact your insurance company, to request a refund.
Got it.
Is that what you were looking for there?
Yeah, I think so. And Danielle, if that kind of satisfies some of your questions, I will say one, like in a couple things in my experience too. So Greg alluded to some of like the questionnaires and paperwork that kind of get distributed for the management company and for like board members to review and complete. A number of those questions relate to like operational controls, things that are, liabilities that are open to fraud, things of that nature. So when we answer those, we'll explain like our internal processes for a number of things. So like for the sake of the example, let's say, one of the routine questions on that fraud questionnaire is, are there separate controls, different staff members that handle accounts payable versus accounts receivable, so that we don't have like risk of, the same people kind of seeing both sides of the books that way. And like our short answer is yes, we have designated, split responsibilities, split staff that handle those things separately. So like, for example, let's say like I responded to that and saying, no, we have one single accountant that does everything. And that, Greg might flag that as something to say, hey, you know what, Westward360 responded in this way, where this is a concern for me as an independent auditor. This is like an operational control that I would flag and make sure the board's aware of. Again, that's not something we do, but as an example of some of the things that like an audit report might detail, or in copies of them that we've seen from others, like those things will be flagged, which is again important to read that cover letter, because that might share like what we're missing, or those key findings that are in that audit report. It's really important to look at that with a fine-tooth comb.
Before we do these audits, we do our risk assessment with Westward that Eric hinted at, and that helps us develop an audit plan, areas of risk, areas that we need to, that's every managed company we do that. So, but that's part of the planning process that goes into this. It's not just what we discuss here. There's obviously a lot more that's involved in that, but that kind of gears us toward what to do for the audit. Once everything's done in the portal, what to do. So review and read through the report, all 3 levels of service, that rep letter that I mentioned, audit and review only. Review cover letter, all 3. Any of them could have open items. If there's nothing on there, great, still tells you what's included. Ensure that the management company receives the journal entries and trial balance. When you approve the report, if we've made adjustments, typically you will want to incorporate those into your internal management financial statements. And most management companies won't do that until the report is finalized, because these reports go out in draft form until we get this management, the rep letter signed by the board. So once that's done, once we finalize the report, it's in one 40, 50-page document that has the audit report. All those 6 deliverables are in there, but that draft watermark is removed. So once management has that final report, they can go in and look at the adjustments we made, incorporate those into your internal financials. Ensure tax returns are filed. Again, all levels of service, the management letter recommendations. If there was a modified opinion, consider what changes need to be implemented. Probably can gloss over that. We don't have a lot of those, but if there is a reason we have a modified opinion, it's a significant issue. So there's probably been a lot of conversations going on before you even discover that. So it won't be a surprise to you. And then of course, if you have any questions or need anything, feel free to schedule a meeting with us. We're here to help. So earlier I hinted at the proposal versus the engagement letter. Those are 2 different things. We can start the engagement if we have an engagement letter. We can't start if we have just a proposal. The proposal, this is an example. It's for those boards that don't know what they want, but they want to see what it costs. So we summarize what the 3 levels of service are, and then this only has audit and review, but typically it'll have compilation here, and then it gives you the 3 years, and it gives you pricing in each level. So you go through each one, you say, well, funds are tight this year, we're going to do a compilation. So you circle the compilation price for the first year, audit the next 2 years. You sign it, send it back, and then we send you the tailored engagement letters for those years. We're going to go through an audit engagement letter here, but if you know what you want, if you're an audit every year, just come to us, say, hey, we need an audit engagement letter. But if you don't know what you want and kind of want to see the different levels of fees, ask for this proposal. A lot of boards don't know the difference, but hopefully that makes sense to you. If you're not sure, get the proposal. If you know exactly what you want, ask for that type of engagement. This is an audit one. We're not going to go through all this text. I don't want anyone to be sleeping at the end of this. Tells you the years. Most boards find it helpful to engage for 3 years. It helps you in budgeting. It's one less thing to worry about. 3-year agreement, great. What's included in the audit? It tells you our responsibilities. And then the next page is management responsibilities. So management is kind of both the management company and the board of directors. Those terms, unfortunately, are interchangeable and can cause confusion, but its management is both in this case. It also most of our contracts include tax preparation unless you explicitly say don't, because you have someone else preparing it. And then that last point, associations management is responsible for making all management decisions and establishing and maintaining internal controls. Keep stressing those internal controls. That's one of the biggest focuses of the audit. Page 4, it simply says that's what a lot of them care about, the fees, our fees for the engagement, and kind of just hints at the electronic communication that we used in the portal. This was new last year, so that's why that portal is mentioned so much. It was new a year ago, but I think a lot of our boards loved it and are used to it by now. This part here, the fee estimate is based on anticipated cooperation from your personnel and the assumption that unexpected circumstances will not be encountered during the engagement. What does that mean? Special assessment, investments, loans. We bid these 3 years out, and if you decide in year 2 to have a $1.5 million special, you change management companies, you invest all your money in Bitcoin or something. That's not what we bid these fees on 2 years ago. So that caveat is in there to cover us in case, so we're not locked into that if things go off the rails for your association. That's not, we're not looking to nickel and dime you with that, just that's in there to cover us in case those things change significantly.
I think I'm glad you touched on that too, Greg, just because we have like encountered that in my experience too. For instance, I remember an audit that we were doing for a mid-rise community at one point, and one of the complications that came up was the very delayed discovery of like a shared expense agreement and an easement between a commercial space that, you know, prior management didn't even know about, that there were just legal back and forths and a lot of shared expenses that never were tracked before. So suddenly there was a lot of extra work that had to be involved once that was discovered. So that was a good example of where like a conversation had to be had with the board and say, hey, you know what, there's going to be a dozen or more hours dedicated to additional work because of newly discovered items and complications. So it is something that's good to keep in the back of your mind if your board has either upcoming known complications or things that might change, you know, noticeably, or anything that's recently discovered that needs to be kind of relayed, so that you have an accounting of what any additional costs you may encounter for those things.
This was a handful of years ago. We had a handful of associations all start investing in mutual funds when they previously just had a money market. Those are very involved. So what we typically do in that case, we'll issue a change order stating that, you know, beginning in 2023, you start investing 800,000 mutual funds. So X hourly fee will be subject, you know, for the reconciliation of this activity. The last page, I've said this before, but then the association and the management company sign it. What slows the audit process down? Management response time. That's the biggest one. Not much more to say than that. We do have the boards on it. The boards can jump in. That's why they're there as well. But that's the biggest roadblock we encounter is in delaying our reports.
Just to add to that like management response time is a real one, and that is one that we take seriously. We need our managers and our staff getting to those answers promptly. If any of you board members, if you're on those communications, and if you ever see a lapse or a slowdown in communication on any active like audit or financial preparedness matters that your manager is not getting to quickly enough, let us know immediately. I know we recently distributed those escalation paths to board members so you understand who to escalate like any sort of matters to. You know, we're human. We might make mistakes. We might be slow on a response when we don't intend to be, but get it escalated to their supervisor or even myself at times, because we want to make sure that we be prompt in those. We want to get Greg or any other firm that needs those that data, responses, context, whatever detail, and we take it seriously. So don't feel, don't be afraid of escalating it. You're not getting anyone, purposefully in trouble, but we take it seriously. We want to get to it. So if you do ever encounter slow responsiveness, make sure you get it to the right person or myself.
Right. And the second point, unable to obtain documents, that kind of goes hand in hand with the response time. If a management company has everything available, we can just download it or generate reports ourselves. That's great. Change in management companies, I mentioned that earlier. But if we're going off, a lot of times we're stuck in the middle. Old management saying we sent it to them, new management saying no, they didn't, and we're in the middle. So if there is a change, that can be a headache on our side. Signing the rep letter, we typically want that signed within 60 days of when we're issuing that report. Unfinalized prior years. If you don't sign the rep letter from 24, guess what? We're not doing your 25 audit till you do. So make sure you sign that and finalize it so we can start the next year. And these were just those links I hinted at earlier, difference between 1120, 1120H. There's a lot. We're not going to touch on it here. These are all available on our website too. So another one we did about financial planning for associations. And 606 for revenue recognition. Again, this is from a few years ago. We're not going to get into it here, but that's another one.
Once they pass us by, we get a signal, continue south to our next intermediate station stop on White.
And that's all I had. Do you have questions?
Yeah, this is a great opportunity to transition into any questions that folks might have. I know I do have a few pre-submitted questions from a couple of board members that may or may not be on the call that I can also address. But anyone in attendance have any questions about anything that Greg covered, anything that how we kind of interact with auditors and things like that? Don't hesitate to share right now. Okay. Well, I guess a couple just quick. Oh, here's one. Chris asks, so if our HOA only makes $100 a year in interest income, is there any reason for doing 1120 versus 1120H?
No. But well, that's hard to answer the question in a vacuum. Just because you're getting next to nothing in interest income, you could have tons of other operations going on. Like if you're a commercial association, right? $100 in interest, but you're probably failing the residential test where you have to follow the 1120. But a standard condo or HOA association, no, I don't see why you need the 1120.
That makes sense. One of the questions that was submitted that I think, Greg, you've already sort of answered, but just to reiterate it, there was just a question from a board member at Pine Lake Condominiums of Tinley Park that had asked about the recommended frequency of audits or compilations or reviews. I know you mentioned annually and those 3-year engagements, but have you seen anything that varies from that or any other sort of best practice?
No, and it's really an association's prerogative. Most of ours do it annually. I would just say that, because if you're doing that every other year thing, we're going to charge you more because we have to do more procedures on those beginning balances, because your balance sheet rolls year to year. So that prior year that's rolling into your next year is unaudited. So we have to do additional work on that. When if you've done the audit, it's good to go because we did the audit last year. You know, the adjustments were made, we're good. It depends on what you have going on. I think you should do something every year, but if you're a 20 unit HOA with very hands-on board who's on top of everything, like, you probably don't need an annual audit. But if you're a complicated condo association with a lot going on, like, I don't know why you wouldn't want that annual audit. Again, it's hard in this industry to be absolute, because you can have two buildings next to each other, and we do have some that are right next to each other, the same amount of units, like 400 units each, and they have vastly different financial situations, because one board has been more on top of things about repairing and replacing things, and the other is not. So guess who has a special assessment? Guess whose reserves are underfunded? We can't just bid. If you come to us and say we're a 20 unit association, what's our fee? We need to see your financials. We can't just bid based on that, because everything's so different. Each one is its own unique situation.
Mm-hmm.
Hope that helps.
Yeah, I think it does. Related to that, Jetta asks a couple of things. What do you recommend in the event there has been a number of years between audits? For example, an audit was last done in 2021. Should 2022, 23, and 24 be done? Or, you know, going into 2025, should we just start there?
It's a cost benefit, and because we do have a lot of these come to us, it's a cost benefit. Do you have suspicions of anything? Were there change in management companies? Do you have concerns? If you don't, it's probably just to start now. But if you do, because some come to us and legitimately have allegations of fraud, misappropriation of assets that we found and discovered. If you don't think there's anything of that magnitude, it's probably not worth the cost to have us go back and audit 3 or 4 years in 2026. Because what if we do find, I talked about those overpayments to vendors. If it's 3 landscapers ago, are you really going to get that? Sure, we found $3,000, but you paid us $15,000 to do the 4 audits. It's what happened in your association. If you think something may have gone wrong, then it might be worth digging up. But if you don't think so, you probably just start now and go forward.
Got it. Jetta, does that answer your question? Okay, hopefully it does. All right, good. Andrea or Andrea, sorry if I'm not sure which you pronounce it as, but she does ask, if tax preparation was elected at onboarding, does Greg's company complete the tax returns, or is it done internally within Westward? And I believe you're likely referring to like onboarding with us. So great question, actually, and one that I was going to make sure we got to. So let's say if you guys recently onboarded with us to manage your community, and one of the items that we had on our ancillary fee schedule options was the completion of your tax return. Until we know otherwise, we will be the ones preparing and helping file your tax return and get that done and collect your signature. Now, let's say like tomorrow you said, hey, you know what? We had reached out to Greg and we have contracted with Sekursky to do, you know, an audit this year, and they're going to do our tax returns. That is where they will be the ones handling it. We will no longer do that for you for this tax year. Obviously, we don't want to bill you for work that we're not doing. So we will make sure that we follow your direction and whomever is contracted for that. So anytime you have like your auditor, or if you have a third-party accounting firm that does any sort of additional work on your financials, or you've utilized them to handle your tax returns in lieu of us, totally fine. More importantly than anything, we just want to make sure you're not paying twice for the same work. So we'll make sure that if you've contracted with anyone to do those returns, they will get first priority. We're obviously here if something, you know, falls through and you need us to help there. But otherwise, yes, if you contract with Greg's firm or another accounting firm, we will make sure that they are the ones handling it if that's what they were contracted to do. And obviously, we'll get any materials and preparation of reports, anything that they need in order to successfully prepare and file those returns, or prepare them rather, since we'll be the ones actually submitting and getting them to the government on the state and federal side. But we'll prepare and make sure that they have what they need. One other thing that I'll add to that, Greg referred to this earlier in terms of like portal access to sometimes be able to access or download reports. That is one nice thing that we do have on our end. Vantica, our management software, does allow us to get set up to have third-party access into the portal. So like, let's say Greg is working on an audit for one of your communities and he needs to get started on that and his team members need access, rather than just kind of having to do this back and forth to produce a lot of reporting for him. He's actually able to, or his team is able to download, access some of those reports a little bit more easily. It slows down or speeds up the access and ability to get all of that reporting that they need as well. Anything to add on that at all, Greg?
No.
A couple other questions that are a little bit geared more towards me. So Jennifer asks, what are the qualifications of the Westward staff who would be preparing the association's tax return? So that is typically John Pertigau on our side. He is our CPA on hand. So anytime we have an association that is contracted with us to handle those returns, we have John involved for the preparation of those returns and making sure that those are that the manager gets a copy of those, and then we get those over to the board. But those are overseen and prepared via John on our staff. And then obviously, if the board wants to work with any other sort of preparer, we can always work with them as on a third-party basis, whether that's Greg's firm, whether that's another firm. We'll be able to work with them as well. And then Thomas asks, does Westward360 prepare taxes automatically at the current fee? Yes, like if you have not contracted with another accounting firm, if you haven't given us direction otherwise that you don't want us filing, we have had boards that say, hey, you know what, I'm a long-term treasurer, I'm comfortable with being able to prepare the tax filings, and I've always been able to do it on my own, and that's the board's direction, then totally fine. Again, like we don't want to bill you for something we're not doing the work on. So if you have preference that the board is going to be preparing it on a self-filing basis, if you want to work with a third party, totally okay. But otherwise, if you have not given direction one way or the other, and you've been silent on that, we're assuming that you want us to proceed with filing as we have in years past. So we will complete those returns unless we hear otherwise. And that'll be for the rate that is in the annual fee schedule and in your agreement. And then Andrea asked a question for Greg. As a previously self-managed building of 9 units, no tax returns were ever filed. Knowing now we need to file, what is your best advice on the past years?
I mean, we typically say go back 2 to 3 years. Yeah, we can talk later if you'd like, but typically we say 2 to 3 years go back. I assume you were formed a lot long ago than that. Every year we have a handful of associations come to us. They've never filed. They haven't filed in 20 years. Typically, the good faith effort is that. I haven't seen the feds or state come back and say, no, we need your previous 18 years. A lot of times these associations fly under the radar, it seems like, for those, but that's kind of every situation is different. Yeah, 25 years. I'd start with the last 3 years. And go from there.
And that's okay. Got it. And that's good timing. Just for context, Andrea, I believe you guys just came on board January, so just recently started with us. That's absolutely something we can help with. Whether you need Greg's input, and I'll alert your manager as well, so that they can work with you on the plan forward with the board for getting those back returns filed with whatever Greg's advice is in terms of those most recent years.
That assume you have the financial records too.
Right. Mike, nice to see you. He asked if we'll be able to get a copy of this presentation and slides. Yeah, that was the intention. We'll be able to send both a recording of the actual conversation tonight. So if you ever want to refer back to any parts of the conversation, you'll have that. We'll include a copy of Greg's presentation with that as well, so that you have that to refer back to for any sort of clarity, any reminders on any interesting points that he raised during the course of the presentation, and any notes. And then I know a few people did have like their Otter and AI tools. I actually had one on through Google's Gemini tool, and I'll distribute some of those notes as well, so that if any folks didn't, I know some of those, I got the notification that yours might have dropped off at the 30-minute mark. So if anyone's, your apps didn't capture any of those, I'll have a transcript of some notes that I can include with the distribution to the attendees.
Here's my email too. That's best if you want to reach out as well.
Excellent. Super helpful, Greg. I think that you made what often can be a little bit dry of a topic and content a bit more interesting and engaging. I think that there's a lot of things that, even I, 12 and a half years in, am learning every year when we kind of talk about these things. And yeah, don't hesitate to reach out to Greg too. He's been a really great contact for us over the course of my career with the organization, and really just helpful for a lot of our managers. I know Maisha on our team was instrumental in getting this on the books and engaging Greg to be able to get involved tonight. So if you do have questions for him, don't hesitate to reach out. If you have any questions on the management side of things, reach out to your manager or myself. I'll make sure that you've got my contact details included in the recap that we send out with the recording and things of that nature. And then otherwise, we will have invites going out for next month's sessions as well. So keep an eye out for future opportunities. I'm sure we'll have Greg back on in the future to tackle either some other financial related topics or do our latest and greatest next year on this topic too. But yeah, any other questions afterwards, feel free to reach out and utilize Greg as a resource or myself. And more than anything, thanks for attending, everyone, tonight. I know that everyone's busy. It's a kickstart to the year. Figured that this was a good topic to really get started on, given that we're right in the throes of tax audit engagement season. And to Greg's point, I know that they're already booked up for a lot of things. So time is of the essence if you guys do want to consider that. And if you haven't done audits before, to try to get some of those proposals moving along quickly.
Yeah, back to that real quick. Maisha had, when we talked Monday, if you're looking for those bids, we recommend, like, if you're looking for like a 26 audit for next, because we would do the 26 audit in 2027. Come to us in the summer for that bid, because that's before your budget. That can help you estimate for our fee in your budget. So that's an ideal time to come to us if you want like an audit for 2026.
Awesome. Well, thank you, Greg. Thanks everyone for attending. Really appreciate it. Keep on the lookout for the recording, notes, and presentation to be distributed by the end of this week. And stay tuned for our next installment of this next month.
Thank you.
Thanks, everyone.
Appreciate it. Have a great night, everyone. Thanks, Maisha.